Gold's price restarted its rise over the past week. Today we are to discuss the fundamental challenges laid ahead for the precious metal, the negative correlation of the dollar with gold, as well as upcoming financial releases that may affect the direction of gold's price action. Finally, we will be concluding this report with a technical analysis of gold's daily chart. We make a start with the weakening of the dollar over the past week against its counterparts for a second week in a row, which in turn allowed gold's price to rise. The negative correlation of gold to the dollar continued on Monday, but the dollar remained relatively unchanged. We expect the negative correlation between the dollar and gold to be maintained, in which case should the dollar cede further ground against its other currencies, we may see gold's price rising further. We also note that since our last report, the yields of US bonds continue to be on the decline, and the drop of US yields applies to short-term as well as to long-term bonds. It should be noted that the attractiveness of US bonds as safe haven instruments tend to be reduced as the drop of US yields weakens the compensation for the individual investor, while at the same time tends to increase the attractiveness of the precious metal. Should US yields continue to decline in the coming week, we may see investments being diverted from US bonds towards gold, thus providing some bullish tendencies for gold's price. The assassination attempt on Trump last Saturday shocked the markets, enhancing its uncertainty somewhat, yet that effect calmed down quickly. On the flip side, the unsuccessful attempt seems to be causing a rally around the flag effect for Trump supporters and thus enhance the possibility for him getting elected, something that the market may already have started to price in. Should market expectations for such a scenario continue to strengthen, we may see safe haven outflows for the dollar, which in turn may allow gold's price to rise further. We highlight that the rise of the gold's price intensified by the release of the US CPI rates for June past Thursday. The release highlighted the easing of inflationary pressures in the US economy over the past month. The easing of inflationary pressures in conjunction with the cooling of the US employment market for the same period intensified the market's expectations for the Fed to start cutting rates in September and deliver another 2 rate cuts within the year, one in November and one in December. Should Fed policymakers ease their hawkishness and maintain a more dovish outlook for the Fed's intentions, we may see gold's price getting additional support. We tend to view the Fed's monetary policy stance as maybe the key factor behind gold's movements, given that market-wise, the perception of the reality is the reality. In the coming week, though, we also note that some key US financial releases that could affect gold's price, among which the US industrial production growth rate for June, tomorrow Wednesday, and July's Philly Fed Business Index on Thursday. Our worries for the recovery of the Chinese economy tended to intensify after Monday's Asian session as the number of data released were alarming. The GDP rate for Q2 and the retail sales for June slowed down beyond market expectations, but also the urban investment and the industrial output growth rates decelerated, while house prices contracted deeper, all being for June. Calls for supportive measures by the People's Bank of China have intensified, and we may see gold purchases by the bank easing, which could have an adverse effect for gold's price if materialized. Gold's price moved decisively higher over the past few days and is currently breaking clearly the 2,375 resistance line, now turned to support. We tend to maintain a bias for the upwards motion to continue as long as the upwards trend line guiding the precious metals price remains intact. Furthermore, we note that the 20 moving averages, which is also the median of the Bollinger Bands, the 100 moving averages and 200 moving averages are all pointing upwards, supporting gold's upwards movement. Also, we note that the RSI indicator is on the rise, nearing the reading of 70 and implying a strong bullish market sentiment for gold, which could push its price even higher. On the flip side, we note that gold's price is flirting with the upper Bollinger Band, which may slow down the bulls and or even cause a correction lower. Should the bulls maintain control over the bullion's price, we expect it to breach the 2,450 resistance line, which is also an all-time high level and set as the next possible target for the bulls, the 2,525 resistance level. Should the bears take over, we may see gold's price falling, breaking the pre-mentioned upward trend line in a first signal that the bullish movement has been interrupted and continue to break the 2,375 support line, clearly setting in its sights the 2,290 support base. Thank you for being with us for today's financial update. We wish you a solid trading from all of us here at IronFX.